To beer or not to beer? That is the question. Hello, we're Group 3. The following analysis compares the business and financial strengths and weaknesses of Constellation Brands and Boston Beer. We are doing this from the perspective of venture capitalists who are seeking growth or disruptive opportunities within the alcohol beverages market. To summarize our approach, we did a thorough financial review of documents, including but not limited to 10Ks, Dev 14As, earnings calls, analyst reports, and the 4 financial statements. Once we reached the conclusion, we are going to recommend investing $1 billion in Constellation Brands to support the cannabis and Mexico beer expansion projects, respectively. We are also going to recommend lending $1 million to Boston Beer to create a grant for the Brewing the American Dream program. We will go into further detail about how we came to those conclusions during this presentation.
With that, let's jump into a little background on the industry of alcohol. So the alcohol industry is actually valued at $1.4 billion, and this value was taken in 2017. To get a better sense of the context, we can compare this to the value of the non-alcoholic beverages market, and that's around $1.1 billion. Now, how much alcohol and what kinds of alcohol are people actually consuming? So if we break it down by segment, and these are the segments that the companies that we're evaluating operating in, we see these numbers. They're represented by consumption in category in millions. We see that beer is actually at the top of the list in comparison to other segments like wine, spirits, and even cider. If we measure the preferences of alcohol, so this data comes from a Gallup poll, we could look at the trends from 2001 all the way to 2017, and we see that beer is actually consistently at the top. So consumers really prefer to drink beer more than other types of alcohol. So what we're drawing from some of this market analysis is really there's a big market for beer, big market for both of our companies to market and sell to.
All right, with that, to jump into our first analysis here of our first business, starting with Constellation Brands. So Constellation Brands is a company that was founded in 1945, and it's a Fortune 500 company that has an extensive portfolio in 3 different segments, including wine, spirits, and beer as well. So as we'll see, it's an extensive portfolio, again, that covers more than just one segment in particular. Starting with the beer segment, the market share for Constellation Brands, as we can see, really dominating the beer segment market share at over 50% compared to its competitors. Speaking of those competitors, again, in the 3 segments, beer, wine, and spirits, some of the big ones in beer, Anheuser-Busch, Molson Coors, Heineken. Over in wine, we have E&J Gallo Winery, the Wine Group. And finally, in spirits, there's Diageo and Brown-Forman, to name a few. Operations for Constellation, predominantly in North America. So we see, obviously the United States, Mexico, and Canada, but then across the world as well, Italy and New Zealand. Some of the recent acquisitions in the beer segment for Constellation, and recent being in the last 5 years. In 2013, we see the acquisition of the beer business for the rights to market and sell Corona in the U.S., so a big acquisition there. 2015, Ballast Point. 2016, Obregon Brewery. This is a big one as well, providing a brewing capacity to support their high-end Mexican portfolio, as we'll get to later. More acquisitions, this time here from the wine and the spirits segment. And again, what we're seeing is the trend of activity. We're seeing the business strategy of Constellation Brands being to acquire businesses, 3 alone coming in 2016. With those acquisitions, though, do come some risk factors. Obviously having an international operations, there's going to be, currency rate fluctuations to be aware of. The dependency of their Mexican beer brands, they only have two breweries, which are currently the sole source of their supply, which is a huge factor on their beer segment. Indebtedness, obviously a big one as well. When you're financing major acquisitions, they have incurred substantial debt in recent years. The wine portfolio as well, something that they're planning to do is sell their wine segment specifically to focus on cannabis. And speaking of cannabis, in 2018, Constellation's investments included $4 billion to invest in canopy growth. Timeline of some salient events. 2018, a pretty big one. Constellation Brands named a new CEO, Bill Newlands, just last month in October. He'll take over effective March 2019. And then finally, we'll look at the earnings call for Constellation. Specifically want to draw attention to their revenue projections, where they beat those projections by $50 million at $20.3 billion. Also, too, we can see the slow market in U.S. wine, less than 11% retail price point, get an indication of why they're shifting gears a little bit. They're focusing away from wine and more on cannabis. And then you can see the earnings per share projection of $9.60 to $9.75. Pretty impressive when you consider the fact that this is not including the impact of the additional $4 billion investment in canopy growth. So some really interesting metrics seen here on the earnings call.
Let's take a look at Boston Beer, and we can see how they're performing from a business analysis perspective as well. Boston Beer was founded in 1984, and their focus is really on producing beer, specifically more craft beer. They also produce malt beverages and cider products. Boston Beer's operations are spread around the globe, so they have operations in North America, in South America, in Europe, Australia, and even in the Pacific Rim. If we look at their market share, unfortunately, they only have around 7% of the overall market share of the beer segment. So when you compare that to their competitor, Constellation, they definitely have a smaller slice of that pie. Some of Boston Beer's competitors, we've been speaking about them throughout this analysis: Anheuser-Busch, Miller Coors, of course, Constellation. So really those big players in the beer segment. Their strategy is really to focus on advertising. So we saw in an analysis from 2016 to 2017 that Boston Beer's promotional expenses increased by 5.9%. So they're really making an effort to just advertise and market their brand a little bit more. Some of the key risk factors related to advertising is a lot of the expenses that come with it. So since Boston Beer, they really only have that 7% of the segment share compared to their competitors, they may have less financial resources. So they have to be really smart and safe when it comes to spending on advertising. Also, Boston Beer has a big dependency on distributors. So we saw that their operations were spread around the globe. So this becomes a potential risk factor, again, competing with big players like Constellation, who are constantly acquiring these large companies. Boston risks losing some of these distributors to those bigger players like Constellation. Boston Beer has also participated in some acquisitions, so they've acquired a number of breweries, and they also started a new subsidiary. It's called A&S Brewing. And this subsidiary also acquired some other breweries, so they're really investing a lot, and you can see that their play is in that craft beer market. Boston Beer also has a program where they give grants to small businesses, and these businesses are in that food and beverages space, and they may not qualify for other loans. So you can see they're really doing this not only to create jobs, but potentially for them to reap the benefits if some of these businesses actually do well. Some other salient events similar to what we saw with Constellation is that Boston Beer is announcing a new CEO. So there's some disruption that's happening at the executive level, which is a little bit concerning to us as potential investors. If we look at the most recent earnings calls from Boston Beer, a couple points to call out. Obviously, you can see in the lower left-hand corner that their advertising and promotional expenses has increased by around 37%. they're introducing a new Samuel Adams advertising campaign. We also see, though, that their overall earnings per diluted shares and their revenue is progressing nicely in an upward fashion.
Next, we want to deep dive the financial analysis and talk about a few performance ratios. For leverage, we are going to look at the quick ratio, current ratio, debt ratio, and debt to EBITDA. For an operational KPI, we look at the gross profit margin. Constellation's leverage ratios tell a story of debt. As we can see here, the debt ratio shows that about 61% of their assets are financed by debt. Their debt to EBITDA is almost 5-1, while Boston Beer, on the other hand, performs very well in this regard. Boston Beer's debt ratio is around 26%, and their debt to EBITDA is less than 1. And both companies are showing relatively comparable gross profit margins of either just north or just under 50%. As we referenced earlier, they have comparable working capitals or current ratios. It's interesting to note that their current ratio is very similar despite their difference in annual sales and revenue. Next, we want to look at the gross margin percentage. Boston Beer is very consistent with their gross profit margin, while Constellation is improving year over year. Next, we are taking a look at the operating margin percentage. Constellation's operating margin is roughly 3 times that of Boston Beer's. However, they are both fairly consistent. Next, I want to shift the attention to the statement of cash flows and Constellation's horizontal specifically. Because of their capital expenditures, investments, and financing activities, Constellation is showing a negative cash flow year over year. If we turn to Boston Beer's statement of cash flow horizontal, there are 2 things of note that are very interesting here. The first is that they're also showing a negative cash flow year over year. Second, they're showing an increase in net income year over year despite declining sales revenue. You can see that on the income horizontal that's in the backup material. What this implies is that they've demonstrated operational excellence and are managing their expenses very well. So to recap, essentially both companies are reporting negative cash flow, but the stories behind why they're doing them, they tell very different stories. Constellation's story is one of investment and prospect for the future, while Boston Beer's is one of declining sales, and it shows some operational excellence with respect to the way they manage their expenses and liabilities. However, there are still some questions to be answered with respect to whether or not their strategies will net sales growth in the future. Next, we want to shift our attention to the balance sheet vertical. And here we're looking at Constellation's balance sheet. And what we can see here is that 39% of their assets are tied up in goodwill. This aligns well with their strategy of acquisition and explains partially that negative cash flow that we referenced earlier. Turning to Boston Beer's balance sheet vertical, we can see that their cash and cash equivalents have decreased 3%, but their total liabilities also decreased about 2%. They've stayed relatively consistent. But again, the story of their negative cash flow isn't actually apparent. It boils back down to the fact that their sales are declining.
All right, let's shift gears a little bit here. Take a look at some metrics comparing Constellation and Boston Beer profitability specifically. So as we can see here on this slide, the return on assets percentage in the trailing 12 months, very comparable between Boston Brands and Constellation. One thing we can note, though, is that Constellation clearly on the trending up. On the net margin percentage, again, Constellation trailing up in the trailing 12 months, although Boston Beer, there's something to be said for their consistency here, despite the fact that they are not climbing at the rate that Constellation is. The return on equity percentage, again, very comparable numbers. Constellation, though, again, we're seeing a trend here of their growth year over year, and in the trailing 12 months exceeding that of Boston Beer. The valuation, so the price to sales, again, we see similar metrics in the profitability where Boston Beer, again, is consistent, if not stagnant, whereas Constellation is trending upwards. The price to book, very similar year over year and in the trailing 12 months between Constellation Brands and Boston Beer. And then finally, the price to earnings, 2016 and 2017 nearly identical, and Boston Beer, in fact, trending upwards in 2018 compared to Constellation.
Let's take a look at executive compensation for Constellation. Again, it's pretty consistent from 2014 through 2018, where it's somewhere in the range of 23 million all the way to 32 million. What's interesting is when we compare this to Boston, if we look at their compensation, there's this big spike in 2016 of around 42 million. So we dug into this a little bit further, and interestingly, their CEO actually withdrew $23 million in securities. So as potential investors, this is concerning to us that maybe there's something going on that we don't know about. We also want to consider what's Wall Street's position. In terms of profitability, Constellation is having this really nice upward trend. They've been focused on upgrading their Mexico beer operations. And then, of course, they've just invested all this money in canopy growth. So we're really excited because there's this huge opportunity for their profitability to really skyrocket as that project comes to fruition. Compared to Boston Beer, again, Boston Beer is also showing a nice positive uptick. Not quite as steep as Constellation, but they do have this clear 3-point growth plan. So it's really around reviving their Samuel Adams and Angry Orchard brands, and commitment to innovation in brands also like Truly Spiked and Sparkling. Unfortunately, as we saw in some of the early market analysis, these segments around cider are a little bit smaller. So as potential investors, this is also not as exciting to us.
All right, to circle back to Constellation, and we'll look at the SWOT analysis here. So to sum up their strengths, we talked a lot about their extensive portfolio, their beer, wine, and spirits, their strong brand recognition as a Fortune 500 company. That's leading to opportunities such as acquisitions of companies, investment opportunities, as we've seen with the $4 billion investment in canopy growth. But on the flip side, these are also, potential weaknesses with these opportunities. As these acquisitions are coming through, there's a lot of debt that Constellation is incurring. And in fact, 61% of the company's assets are currently financed by debt. So again, with the focus on acquisition, there's a lot of debt that's incurring as a result. So, and then threats, of course, as well. The Mexican beer brand dependency. That's something that, again, they only have the 2 breweries in Mexico that are the sole source of that operation. So that's, a potential threat in addition to their declining wine sales, which, as we noted earlier, is leading to their potential sell of that segment altogether.
Our SWOT analysis of Boston Beer also shows that Boston Beer's opportunities and threats are somewhat paired. And what this means is that Boston Beer has an opportunity to kind of be a big player in that premium craft beer space. But it's also a threat because beer is a crowded market. They really have to focus on operational effectiveness in order to play with some of the big guys like Constellation. In terms of their weaknesses, again, we see that there's this really big increased marketing spend, so this could potentially lead to a decrease in operating margin. And again, for strength, they're a large player in that craft beer market, but they have to be really careful and conscious about their spending in order to compete against people like Constellation.
So in conclusion, the big play for us is not to beer. We are recommending the $1 billion investment in Constellation Brands to support that cannabis initiative and the Mexico beer expansion project, respectively. Frankly, the more upside is residing there.
Yeah, absolutely. And in addition to that upside, the investment timeline for us is aligning with those investments that we spoke to. So the growth of that cannabis industry and the Mexico beer expansion project, which is estimated to spend 3.9 billion through 2021, that will align with our investment timeline as well.
Finally, we're also recommending that we lend $1 million to Boston Beer, and the purpose of this is to create a grant for the Brewing the American Dream program. In order for us to feel comfortable with lending this money, we need Boston Beer to adhere to a debt covenant, and we're going to require that they maintain a 2-to-1 or follow a 2-to-1 debt to EBITDA ratio. They're currently at 4.8, so they're doing pretty well. And we also want to ensure that they maintain a minimum working capital ratio of at least 1.5. Since they're at 1.68 right now, they're also doing that well.